Okay, and welcome back. We are on Chapter 13, Lesson 2. We're going to be recording the employer payroll taxes. So in the last section, we were talking about how to record those taxes that we withheld from employees. Now we're going to talk about the taxes that as an employer, you are obligated to pay too. So the employer payroll taxes includes Social Security and Medicare tax. The employer not only is withholding those taxes from the employees' paychecks, but they themselves have to pay into the Social Security and Medicare taxes. They must also pay the federal unemployment tax, or called FUTA, is what it's commonly referred to. And then there's also a state unemployment tax called SUTA. So to calculate unemployment taxes, let's start there. Because, hold on, let me back up. So the employer Social Security and Medicare taxes, it's not going to show you that, but basically we have withheld from our employees' paychecks the Social Security tax of 6.2%. We as an employer must also pay 6.2%. So basically we're matching what was withheld. Same thing with Medicare, we withheld 1.45%. We must also pay 1.45%. So we are matching that number as well. Now that does go up to the limit on Social Security, just like for our employees. It's only for the first $106,800 per calendar year. So basically we just match whatever we withheld for Social Security and Medicare for our employees. We also have to bring that money out of our own account and send it to the government. Okay, so let's look at how to calculate the unemployment taxes. So first of all, we have a chart here. We're going to list for the December 15th pay period. We have all of our employees. We listed what they had earned prior to this pay period. And remember, we could get that off of their payroll record. Okay, this number here to get to column 3 is we are going to enter the difference between the FUTA tax base and the prior accumulated earnings. So right now the FUTA tax base is $7,000. So once the employee has earned $7,000 for the year, we no longer have to pay federal unemployment tax on them. So that's why it's a benefit for an employer to keep the same employees all year long. So we have to just figure out. So like here for John, he had already earned $27,000. We're not going to have to pay any federal unemployment tax on him because he's already over that $7,000. Anthony, however, had only earned $5,260 for the year. So he still has another $1,740 to go before we get to stop paying on him. So basically what I would recommend doing is just looking and see, is this number more or less than 7,000? If it is more than 7,000, you can go ahead and put a 0 here. If it is less than 7,000, then you need to find out how much less it is. So take 7,000 minus this number over here. That's how we're going to come up with this amount. Okay. For column number 4, that's the earnings for the current pay period. So we're just pulling that right off of their employee earnings record. So how much did they earn this pay period? And then we're going to figure out, what do we owe for them? So here we're going to base it on a couple different things we have to look at. We don't have to pay anything on John, so he's going to get the 0 over here. For Anthony, we still have to pay on the next $1,740 he earns. This time he earned $1,494, so we have to pay tax on that entire amount. Same thing with Ann. Mary was already over. Justin was already over. And then for Carrie, let's look at Carrie. He had earned $6,490 so far. We still needed to pay on the next $510 of his earnings. This pay period, he earned $1,440. Well, this number is more than the $510 that we had to pay on. So we're just going to pay on the $510. We don't have to pay on his total amount that he earned. We only had to pay on the $510. And then during the next pay period, we won't have to pay any more federal unemployment tax for Carrie. We're going to add these numbers up to find out our total FUTA earnings, and then we're going to use the tax rate for that, which the book is saying is 6.2%. Okay, so let's go ahead and look at this first entry that we're going to be looking at. December the 15th, we recorded employer payroll expense. Included in that was $757 and a penny for the payroll tax expense. It was the semi-monthly pay period ended December 15th. So this 757, how did we get that number? We had taxes owed, Social Security tax of $577. Now this is the tax the employer has to come up with, not what was withheld. None of this comes out of the paychecks. This is the amount of money it's going to cost the employer to have employees on top of whatever their hourly pay or their salary is. So whenever you think about an employer pays you $10 an hour, that's not all it costs them. They're also going to have to come up with this additional money. Medicare tax was $117. Federal unemployment tax rate, they took that number we just had on the last screen and multiplied by 6.2% to get the $17.95. Then the state unemployment tax rate, states have different rates, so that's how much that one was. And then it's memorandum number 44. So let's look at this in a T account. So we're going to set it up. Expenses are always a debit whenever they're increasing. So that one's going to go up here, payroll tax expense. That's going to be for the total amount that all of these numbers here are adding up to. Okay, these all end with the word payable. Payable means we have to send that to somebody else at a later time. And so those are a liability, and liabilities are always going to increase with a credit. So that's why we're recording those here. We're just taking the numbers that the application problem gives you and plugging them into the T accounts. Okay, then we're going to take those numbers out of the T accounts. Think of your T account just kind of like your scrap paper that you're working on doing your calculations on. And we're going to put them into the general journal. It's going to be dated the 15th because that's when our pay period ended. The debit goes on the top row, so that's our payroll tax expense. The problem said it was memorandum number 44. And then they went ahead and put in the amount debited. Remember, your debited amount is going to equal all your credits. So if you were looking at your T accounts, let me go back here. So on here, all we had to do, oops, too far. Okay, so to get this 757, if it was not given to us, all we have to do is add up all of these payables, and that will give us the total expense amount. Okay, all right, so that's going to be our debit amount. All of these are credits. You can double check, do your credits add up and equal what your debits do. Okay, so let's look at the audit your understanding questions. What is the tax rate that 3 Green must pay on employees for each of the following taxes? Social Security, Medicare, federal unemployment, and state unemployment. Okay, Social Security is going to be 6.2% of what the employee earns, up to a maximum of $106,800 each calendar year. Medicare is 1.5% of those earnings. The FUTA tax, or the federal unemployment tax, is going to be 0.8% on the first $7,000. And SUTA is going to be 5.4% on the first $7,000. Okay, so those are your rates that we're going to be using. So those are what you're going to be using for your application problems also. So you might want to jot those numbers down. They are in the book. You can find them, but here they are listed out for you. What is the amount of each employee's earnings that are subject to the federal and state unemployment taxes at 3 Green? You guys remember what we said? We only pay unemployment tax on the first $7,000 that they have earned during the calendar year. Okay, so let's look at the work together problem. Okay, so here we do work together. This is the information from the employee's record. Okay, We are ready to start on work together for Chapter 13, Lesson 2. And basically what we're doing is we're going to start here and figure out for our federal unemployment tax, our FUTA taxes, how much do we have to pay on? So it's got part of the chart filled out for us. We know how much each employee has already earned. We know they've already calculated the earnings that they still need to reach that $7,000 tax base. And then we also know what their current pay period was. So now all we have to do is calculate, do we need to pay unemployment tax on this employee still? Or are we to the limit and we don't have to pay anymore? Or do we just need to pay part of their earnings for this period? So the easiest thing that I recommend doing is going down through here and who has already met that $7,000 threshold. So Evan has already earned over $7,000 this year, so we know we don't have to pay anything for his unemployment tax. He's good. He's done. Okay, let's look at Nick. Nick was at $6,100, which meant we still had to pay on the next $900 he has earned. He earned $762.50. That is less than the $900, so we have to pay on the whole $762.50. Let's look at Virginia. Virginia was like $4,380, so she a lot more we have to pay on. So we're going to have to pay on her entire $527 that she earned this pay period. And Carrie was at $6,850, so he was only about $150 away from meeting that threshold. So this pay period, he actually earned $849.50, which is more than the $150 that we had to pay on. So we actually are going to subtract those two numbers, $849.50 minus $150. Sorry, we're not going to subtract. Got ahead of myself. So we only have to pay on the first $150 he earned. So let's take that $150 over here. All right, we're going to add the columns up. Just simple straight math. That number is 3,179. And this number should equal out to 1,439.50. So make sure I got all my cents in there correctly. All right. Let's go ahead and grade step 1. And it looks like we did those correct. So let's go to step 2. For step 2, we're going to be calculating those payroll taxes. So we're going to be using these numbers that we filled in to figure out how much payroll tax we're going to have to pay. So Social Security tax payable is 6.2%. I'm going to multiply 6.2% by the total earnings for my employees for that pay period. Where am I going to get that number? Right here in the chart on column 4 where it was earnings for the current pay period. The total down here, I'm going to take $3,179 times 6.2%. And I want you guys to try it just to make sure you get the same number I do, but I got $197.10. Okay, Medicare, same thing. We're going to take earnings for the current pay period, and we're going to multiply by 1.45%. I got $46.10. Be sure you double check and see if that's what you got. If not, see what happened there. Okay, now we're ready to work on the unemployment tax payable. We have federal and we have state. The federal rate is 0.8%. So remember that point in there. You can't just multiply by 8%. It's got to be the 0.8 and then the percent sign too. So we're going to take, which number are we going to multiply that by? We're not doing it on the total earnings this time. I'm going to do column 5 where it was the federal unemployment tax earnings. So this is all we have to employ tax on. So we're going to take $1,439.50 times 0.8%. And I got $11 and rounded, or 11.516, and that 0.516 will round to 52 cents. So $11.52. Okay. For the state, we have to pay 5.4%. Again, we're going to use this FUTA earnings, this number here, so $1,439.50 times 5.4%. That's going to give me 77.733. The 3 is not at a 5 yet, so I'm going to drop that off, and it'll be $77.73. Okay, total payroll taxes. I'm going to add these numbers together, and you should get $332.45. Okay, let's go ahead and grade step 2. Okay, so on step 3, all we're going to have to do is take the numbers that we calculated on step 2, and we're just going to journalize them down here in the journal. Okay, so we're going to go ahead and put in our date, which will be the 15th of the month. And then we're just going to start with our titles. We always start with the debit one first. The debit is the expense. We're going to put payroll taxes expense. And our document number, it's going to be memorandum 46, and that's going to be our debit. And that number is going to be here, our total payroll taxes, which was $332.45. Then we're ready to list out all of our liabilities. They're all going to be credits. So the first one, we're just going to go in order. It's going to be Social Security tax payable. And it is a credit, and it's going to be $197.10. The next one is going to be Medicare for $46.10. So Medicare tax payable. They should all end with the word payable. Then we have our unemployment tax payable for federal, and it is written just like that. And that one's going to be $11.52. Oops, wrong line. And finally, we have unemployment tax payable for the state. And that is going to be $77.73. So if you add these numbers up, they should equal your debit. So make sure that that works, and then you can go ahead, grade your final step. And for your assignments, you're going to, oh, we missed the date. Should have put the word May in there. Sorry, guys. May 15th. If you got that wrong, that's okay. That's not going to hurt you. But I should have known that because we were on line 1 and we hadn't used the month yet. So for your homework assignment, you're going to go ahead and do application problem 13-2. Let me know if you guys have any questions.